Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, do your eyes glaze over when you look at a financial statement, or you're a board member when it's time to talk about finances? You just shut down, you start thinking about your to do list for the next day. Well, many small businesses and nonprofit leaders struggle with understanding financial statements. It's something that's not very intuitive, but if you work with an accounting professional, you can start to build those financial skills. So, financial statements really, all it is just telling a story about your business or your nonprofit. The transactions that you actually categorize from your bank account and your credit card account is basically rolls up into a financial statement. So you have your profit and loss statement and you have your balance sheet. Profit and loss tells you your income, expenses, gross profit, cost of goods sold, net income, all that good stuff. Balance sheet lists your assets, which is assets is what the organization owns. It lists your liabilities. Liabilities is what you owe, and your equity in the organization. What I want to do, I want to pull up a sample company in QuickBooks and show you how to dissect a financial statement. So I am going to present. Give me a second. And once again, this is a sample company in QuickBooks. I'm going to start with the profit and loss statement. So this is a profit and loss statement. And how I run a profit and loss statement, I always run it by month. So if you are using QuickBooks, any other software, I recommend you display it by month because I like to see that trend. So when you're looking at this profit and loss statement, a lot of times, once again, it looks like just a bunch of numbers. What is it telling me? So this is a sample company in QuickBooks. This is a landscaping company. As you can see, they have a variety of different income. They have design income, landscaping services, pet control services, and other services. If you as a organization provide more than one product or service, you should have multiple revenue accounts. You don't need to have 10, 15, but they should be grouped. As you can see, this organization can actually pinpoint where most of the revenue was being generated. So if we look at the month of January, total income is $942. Well, the bulk of that income came from landscaping services. If we look at February, total income is $6,585.27. Where did the bulk of that income come from? Well, it came from landscaping services. This is why it's important to have your revenue broken out by the different revenue accounts. So you always have your income at the top, cost of goods sold. So if you actually make something, you make a product, your cost of goods sold will be here. Your gross profit is here. The second section is expenses. So what I like about accounting, this format never changes. You always have your income at the top, gross profit, and expenses. So with expenses, why I like this format of this display, because I'm able to see if something is out of whack, something doesn't look right. For instance, look at insurance. Insurance was paid in February. Now, if you are a business where insurance is paid every month, you should say to yourself, well, why wasn't anything recorded in January? What happened to March? We're at almost at the end of the March. This is why this report comes in very, very helpful when you run it by month, because you can identify some things. Now, for instance, say if there's something you pay every month. So, like this is a landscaping company, they have fuel. So, as you can see, they pay fuel each month. Say, for instance, if this was maybe $200, you know what? You can click this number and say, you know what was the driving transactions behind that number? This is where a lot of business owners and nonprofit leaders, they don't realize they can actually click and actually go to the detail. So once again, I'm going to click here. All of those transactions that you're categorizing are going into an account. That account hits a profit and loss statement or a balance sheet. So once again, if you've never done this before, just click on a number and it takes you to the detail. It actually tells you, okay, $63, March 1st, March 2nd, another $52 came in. So this is your profit and loss statement. At the bottom, it gives you your total expenses, then net other income, and then net income. Once again, I like reviewing the profit and loss statement by month because I'm able to identify what has came in versus the fixed costs and variable costs. And then on the revenue side, what are the driving forces behind revenue? So hopefully this information is helpful. You know what? If you need a checklist on how to dissect a financial statement, message me and I'll send over a checklist to your email. Make sure you like, comment, and share, and we'll see you next time.